Welcome back to Explain the Charts, your ultimate guide to deciphering market movements and empowering your trading decisions. Today, August 5th, 2025, our spotlight shines brightly on Meta Platforms, identified by its ticker symbol Meta, a stock that has recently captured significant attention across financial news outlets. The primary catalyst driving this surge is Meta's phenomenal blowout quarter earnings report for Q2, which sent its shares soaring and propelled its market capitalization close to an astonishing $2 trillion. This robust financial performance is unmistakably reflected in its recent trading, showing an impressive over 8% gain in just the last week and a remarkable 72% increase over the past year, far outpacing broader market indices. Such consistent growth underscores deep investor confidence and the market's positive reevaluation of Meta's business model. Beyond the immediate numbers, Meta's strategic narrative is compelling. Mark Zuckerberg is heavily emphasizing the integration of advanced AI with wearable devices, exemplified by ongoing discussions with AI video company Pika and aggressive talent acquisition for its superintelligence labs. These bold, forward-looking moves position Meta at the cutting edge of technological innovation, fueling strong long-term bullish sentiment among investors. However, no investment is without its nuances. Recent reports highlight an investigation by the Italian Competition Authority into Meta for alleged abuse of its dominant market position. This regulatory concern introduces a potential headwind that warrants close monitoring, as such probes can lead to fines or operational restrictions. Furthermore, the macroeconomic backdrop is evolving favorably. There's an 85% probability of a Federal Reserve rate cut in September, a significant dovish shift influenced by the latest jobs report. This potential easing of monetary policy would generally provide a substantial tailwind for growth-oriented technology stocks by lowering borrowing costs and enhancing future earnings valuations, making Meta even more attractive. Transitioning to the charts, let's begin with the one-day time frame to grasp the overarching trend and identify major support and resistance levels that define Meta's trajectory. Observing the data from March 2024 through August 2025, Meta has displayed a remarkably strong, consistent uptrend, characterized by a clear sequence of higher highs and higher lows. This well-defined bullish channel, often accompanied by healthy trading volume, indicates enduring buying pressure and a sustained market appetite for Meta shares. Early 2024 saw significant resistance near the $530 mark, a level that, after a brief pullback and retest, was decisively broken in April 2024, effectively converting it into a new, formidable support zone. Mid-April 2024 also presented a notable reversal point, where the stock found robust support around $430 after a sharp earnings-related dip, quickly recovering and resuming its upward climb, demonstrating resilience. Moving into late 2024 and early 2025, Meta continued its impressive ascent, with previous resistance levels around $600 to $630 repeatedly transforming into reliable support following periods of price consolidation. The dramatic spike on July 31, 2025, is particularly striking. This massive single-day jump, accompanied by exceptionally high volume, directly correlates with the news of Meta's blowout earnings report. It's a clear example of how fundamental news can drive immediate, powerful price action, completely overshadowing any prior minor fluctuations or concerns. The all-time high of $784.75, established on July 31st, now stands as the critical immediate resistance benchmark for future price action, a level that bulls will keenly target. This long-term perspective clearly illustrates that while Meta experiences natural and healthy pullbacks, its overarching trajectory remains firmly bullish, strongly suggesting that dips are generally perceived as opportunities to accumulate positions for long-term growth. The consistent price action above key moving averages throughout this period further reinforces the underlying bullish strength of the stock. Overall market sentiment has been largely positive, providing a tailwind that Meta has effectively leveraged due to its strong performance. To understand the immediate lead-up to the earnings explosion, let's narrow our focus to the 1-hour chart, specifically from mid-July to the end of July, a period of anticipation. In this segment, we observe Meta trading within a relatively tight consolidation band, largely oscillating between $700 and $720, indicating a period of indecision. This horizontal price action, marked by smaller candlesticks and somewhat subdued trading volumes compared to the subsequent surge, is often characteristic of a market awaiting a major, binary catalyst. The $700 level consistently acted as a robust support floor during this period, demonstrating its significance as a psychological and technical threshold where buyers repeatedly stepped in to prevent further declines. Conversely, the $715 to $720 range proved to be a stubborn overhead resistance, consistently capping any significant upward moves, creating a ceiling for the price within this short-term channel. For agile swing traders, this might have presented opportunities for disciplined range-bound strategies, aiming to buy near $700 and sell near $720, capitalizing on the predictable ebb and flow. However, for those anticipating a breakout, this was a period of careful observation, watching for increased volume or a decisive break above $720 to signal an imminent, larger directional move. The calm before the storm evident on this hourly chart starkly contrasts with the explosive volatility that followed, highlighting the market's efficient pricing of anticipated, impactful news events, like major earnings announcements. Shifting our view to the 15-minute chart provides an even finer resolution of the post-earnings fireworks and the immediate aftermath, covering the period from July 31st through August 4th. The very first candles on July 31st tell an emphatic story, a monumental bullish gap up, followed by a series of large-bodied green candles pushing aggressively higher, all accompanied by incredibly high volume, signifying overwhelming demand. This explosive move saw Meta's price surge from below $700 to swiftly establish a new all-time high at $784.75, illustrating rapid market repricing. This newly established high now represents the critical immediate overhead resistance level that bulls must decisively overcome to continue their charge. Following this initial parabolic rise, we witnessed a healthy, albeit sharp, profit-taking phase, with the price retreating towards the $745 to $750 area in early August, as some early investors and short-term traders capitalized on their gains. The fact that strong buying interest re-emerged precisely at this $745 to $750 level, causing the price to bounce back up, is a critical technical signal. It suggests that this range has effectively transformed from a prior resistance into a validated new support zone, absorbing selling pressure. The swift recovery from these intraday lows back towards the $770s, as clearly seen in the subsequent 15-minute candles, indicates the underlying resilience and conviction behind this current rally. The exceptionally high volume during the initial surge emphatically validated the move, and while the pullback saw some increased selling volume, the subsequent bounce also came with renewed buying interest, preventing a deeper or more prolonged correction. This short-term volatility provides ample opportunities for agile day traders, but also necessitates precise entry and exit strategies due to rapid price fluctuations and potential for quick reversals. To summarize, let's consolidate the important price levels, offer unbiased predictions with their likelihood, and highlight crucial factors for your trading and investment decisions in Meta. Currently, Meta is trading around $776.37, positioning it just below its all-time high resistance at $784.75, a pivotal level to watch. For a short-term bullish continuation, a decisive break and sustained close above $784.75, ideally on increasing volume, would be a strong technical confirmation of the next leg up. If this breakout occurs, the psychological $800 level would become the immediate next target, quickly followed by potential moves towards $820 and even $850. as new momentum traders join the rally. We estimate the likelihood of this bullish breakout happening in the short term to be high, perhaps 65 to 70%, particularly reinforced by the ongoing positive market sentiment from potential Fed rate cuts and Meta's compelling earnings momentum. This scenario is further supported by the company's aggressive pursuit of AI advancements, which appeals strongly to growth investors. Conversely, a failure to break above $784.75, perhaps indicated by bearish candlestick patterns like dojis or shooting stars at this level, could lead to a retest of the immediate strong support zone at $745 to $750. This $745 to $750 range is crucial for maintaining the current short-term bullish structure. A significant breach below it, confirmed by high selling volume, could trigger further selling pressure. If $745 fails to hold, the next major support level to watch is around $710, a historically significant area where substantial prior accumulation and consolidation provided a robust base. The probability of a significant pullback below $745 is lower, perhaps 30 to 35%, unless there are major unforeseen negative developments, such as a severe market-wide risk-off event or a highly unfavorable and impactful outcome from the Italian regulatory investigation. For long-term investors, the fundamental narrative remains overwhelmingly bullish, underpinned by Meta's resilient market dominance, consistent revenue growth, and its pioneering efforts in the lucrative fields of AI and the metaverse. These long-term strategic investments lend strong credibility to the analyst prediction of Meta potentially soaring past $1,000 in the coming months or years, a target that seems increasingly plausible given its current trajectory. When deciding your trading entry and exit points, always monitor trading volume. Consistently high volume accompanying upward price movements validates the strength and sustainability of the bullish trend. Conversely, declining volume on rallies or increasing volume on downward moves might signal growing selling pressure and potential trend reversals, prompting caution. Pay close attention to specific candlestick patterns around these key support and resistance levels for potential entry or exit signals. For instance, bullish engulfing patterns or hammers at support often suggest a bounce, while bearish engulfing patterns or shooting stars at resistance can indicate rejection. Furthermore, keep a vigilant eye on any breaking news related to Meta's regulatory challenges or new advancements in its AI initiatives, as these can be powerful short-term catalysts or risks. Always implement robust risk management, utilizing appropriate stop-loss orders placed strategically below key support levels like $745 or $710 is absolutely essential to protect your capital from unexpected, sharp volatility. Finally, remember to consider broader market indicators, particularly bond yields and Federal Reserve commentary, as they can heavily influence overall investor sentiment and capital flow towards high-growth technology stocks. Thanks for joining us on Explain the Charts. We hope this detailed analysis provides valuable insights for your trading and investment decisions. Happy trading!